Hey, it's Andrew here, Tried and True Home Loans, Rise Realty, and today I want to talk to you about home insurance. I'm concerned about it. Prices are going up. I've been thinking about this as it might be time to start adding a little bit of extra protection when you're writing offers. So, over the last year or so, I've been watching this. I started seeing this when I would get new loan applications and I'm processing them, and we were having a hard time finding insurance. I happen to be doing a couple of loans for people out in East County in more rural areas, and all of them had to get supplement insurance through the California Fair Plan, adding cost to their overall mortgage and insurance costs. Now, what we've been seeing, all these different articles that I've been posting of people getting dropped. Allstate, State Farm are dropping people by the thousands. They're a nationwide company. They're making money in every other state except here because they're saying that the cost that they charge homeowners right now is so low that the cost of repairing is upside down based on the risk. So we've had a couple of big fires, things like that. So there's been a lot of claims for homeowners insurance, and they're basically telling us they're not making any money here. Now, we know those companies make billions of dollars, so none of us feel too bad about that, right? But everything else in our life is going up. We're paying a couple $100 a month to protect something that is going up 3, 4, 5% a year in equity, and is, for the most part, our average home cost right now is almost $750,000 or higher. So paying a few $1,000s a year to cover $750,000 property, no matter what, it hurts. And it hurts a lot for new buyers who are trying to get this figured out. They've got high rates, they've got high prices, and they've got high insurance now. It's just, they're getting attacked. So I've been writing a lot more offers. And I realized, based on this insurance thing, that it's time to start protecting you guys. So I've put this little video together for you. I'm going to play it for you right now. And it's basically additional language and a contingency that you are putting in place that says, hey, I need to get insurance for my property, for this property, and it needs to meet my loan requirements, and I can only afford to buy this house if this insurance is under X amount.
Okay, so I put this together for you. This is a real estate purchase agreement for California where you're cash buyer, we're buying 123 Anywhere Drive. None of this stuff really matters. We're buying it for $1 million, $250,000 down payment. This 6.5% is important. We're going to come back to that. You can see totals here. These are all typical things that we look at in this contract when we're building your offer. But I want to scroll down to the end here where there's other terms. And as I said, we need to protect you. There's a lot going on right now, and this right here could make or break if you can afford this property or not after you work through your loan. So adding in this contingency language, this offer is contingent on buyer finding suitable home insurance that meets the loan requirements and does not cost more than $100 a month or $1,500 per year, or whatever amount you're comfortable paying that also helps you make an aggressive, competitive offer. But the reason you add this is for additional protection.
Now, we use a interest rate in the same type of way. So where you can say my loan is contingent on me getting a rate at 5%, at 6%, at 7%, whatever it is. And when we use that, we look at what current rates are, and then we talk about it. We know where you're at because you've been pre-approved, and we play around a little bit. Do you want to get this house no matter what? Or do we want to be very strict about how we offer and control our money? And by lowering that percentage, that interest rate, it protects you because it makes it harder and harder for you to actually get that loan. So it beefs up that contingency a little bit. That's all I'm doing with this idea about creating a contingency, adding a condition to the contract, specifically talking about home insurance and the cost per year or per month. So take a look at that. If you want to talk more about getting a home loan, having me help you find a home here in San Diego, I look forward to talking to you. But the most important thing is make sure that if you get canceled, you hunt for new insurance quickly. And if you're a buyer, start hunting for insurance early. Look forward to talking to you guys. Thanks a lot.